Wonderful. Well, my name is Meg Potter. I am one part of our PFM team, our Precision Feed Management team. We're based out of Walton, New York, and work for CCE Delaware County. With us, we have April Wright Lucas is here, and there's quite a few other members of the team participating in the workshop. They're attending from other parts of the world, but you have two people in this big conference room here in Walton. And with that, I am very proud to introduce our presenter today, Dr. Chris Wolf. Chris is let me make sure that I get this right. It's a mouthful. E.B. Baker, Professor of Agricultural Economics and the Director of Land Grant Programs at Cornell University's Dyson School of Applied Economics and Management. Dr. Wolf is a leader in dairy market and policy work. Is currently serving on the chair of the New York Milk Market Advisory Council, maintaining professional affiliations with American Dairy Science Association, the Northeast Agriculture and Resources Economics Association, and Dairy Markets and Policy Extension Education Committee. I think just saying those organizations is enough, let alone being involved in them. We are so happy to have you join us today, Dr. Wolf, and discuss this current milk market trends, offering some insights on what is to come that will help assist our regional farms in making decisions in our day-to-day operations. Thank you for joining us.
Well, thanks, Meg. That was such a nice introduction. Yeah, Cornell is good at naming things, really good at naming things. So I'm gonna, whoops, I guess it wants me to send you a request to share.
Yeah.
That's okay.
Well, real quick, how would you like questions, Dr. Wolf? In the chat? You
know what? If they're in the chat is fine, or somebody can pipe up. If they're in the chat, Meg, I might ask that you and April monitor them to let me know so that in case I miss one.
Sure. Yep. And then folks also do have their raise hand button under React. So that might help if you do have a question and you want to chat about it right then. If you hit the raise hand button, it would be under reactions at the bottom by the little heart. That might help us see that you're asking a question as well. But the chat, you have the option to ask questions, or you can type direct messages to people too. You can ask them to everyone, or you can send them directly to me.
All right, great, thanks. Yeah, let's talk a little bit about where the dairy market is and some of the things that have been going on with it here. There's a lot of uncertainty, I think, just economically right now, and the dairy market is kind of no exception. There's a whole bunch of things that are going. I'm not going to spend a lot of time, on the kind of overall economic outlook probably for the United States here, but there's a lot of things going on that we're all seeing in the news that are going to have an impact here, directly and indirectly, on the dairy market and on dairy farms and dairy co-ops and dairy processors. And the economy has been very resilient, I think, in the last year compared to what we might have think it would have done. But there's certainly some signs of the general economy, like the fact that in 2025, only 250,000 total jobs were added in the country, which is not good. And the kind of consumer expectations is not great. That's usually a leading indicator. And maybe everything works out great, and I certainly hope that it does. But if we get a recession, that has interesting impacts for all of us, right? Because that if we have a recession, that means unemployment's going to be up. The Federal Reserve might be looking for things to do to goose the economy, but at the same time, if we have inflation rising, then they're going to be. This puts the Federal Reserve in a difficult situation, because with stagnant growth, right, then you want to lower the interest rates, but with inflation, you want to raise them. So this is going to be, and for the dairy markets in particular, people consume dairy products very differently when they eat out than when they eat at home. Um, and so kind of who the winners and the losers are if people stay home and eat more, then they're probably going to drink more beverage milk and they're maybe going to eat more yogurt and cottage cheese, but they're going to eat a lot less of some other types of cheeses and creams that tend to be more consumed out. So just kind of with that is kind of a general overview of me telling you that there's a lot of things going on that I'm got to be an economist, right? It depends on what's going to happen. So let's just kind of talk about where we've been now that we have the 2025 numbers in there. This is from the Dairy Margin Coverage Program. So these are US prices, but New York prices are pretty correlated with this. Your specific farm prices are not going to be these except kind of by accident. But I can tell you from looking at the farm data over time and stuff that the US prices do a pretty good job of capturing correlations. And so we had an income over feed cost that was pretty good in 2025 by this measure. This assumes you're always in the cash market and stuff, which you aren't, but so $11.10 income over feed cost, but it was really more of a better in the first half of the year for most people, not so good in the second half when milk prices kind of faded. Not nearly as good as 2024, which was an outstanding year by this measure. These are all nominal too, by the way, so I should make that clear. I haven't adjusted for inflation. And remember, in 2022, for example, we had quite a bit of inflation. So $12.42 in 2024 was not equivalent to $12.42 in 2020. But, feed prices were not bad in the cash markets in 2025. Milk prices were okay, not great, but not bad. If we look at Cornell Dairy Farm Business Summary, the 2025 numbers on here that I have are preliminary. We do not have the final numbers in. This is probably about 2/3 of the farms are in at this point. So not a final number. But I just put milk price in here and rate of return on assets, which is without appreciation. So without appreciation of like land values, which is my preferred measure of profitability on the farm. Rate of return on assets, right? So that's operating profit divided by the asset value that you're using to generate those profits, and ignoring the fact that land appreciation, for example, might be pretty important in some places, and it's a good thing if you own land, right, for it to appreciate. But I don't want to count that land appreciation as part of farm performance here, so I'm doing ROA without appreciation. On 2025, on this number is 5.6% on average. That would be probably a little bit below average long term for these farms, for these data, for the Dairy Farm Business Summary. 2022 is the number that jumps off the page there. That was probably the highest or the second highest average maybe ever. And it's highly correlated with milk price, and there's a lot of variation behind these average prices here and a lot of variation behind that average profitability. But 2024 was a good year. 2025 was maybe an average year. So, knock on wood, we haven't had one of those things like we did prior to 2022 when we had 5 or 6 years in a row that were not so good, that were kind of tough. So let's talk about where we're at for the national and international markets here, because that matters a lot. Milk production was up strongly in 2025. Mostly, well, some cows, but also some milk per cow. In fact, number of milk cows was up in January 2026 to 9.615 million. That's a little over 200,000 more cows than we had a year earlier. And you can see kind of a pretty strong 2-year trend there. But you got to keep in mind, you got to look at the vertical axis on this, because this, the bottom of that is 9.3 million. We've been kind of floating around between 9 and 9.5 million for a long time. In fact, USDA keeps records on number of cows going back to 1924. And I think actually, if you want to dig through individual reports, you can go all the way back to the Civil War, but I haven't done that. This is just the USDA numbers. And so this has got the beef cows and the milk cows on there. And milk cow numbers really declined following World War II. And then for almost the last, 40 years at least, and almost 50, we've been kind of sitting there just below 10 million cows. And then that 2024 number was 934, but now we're 96. So we're the smallest beef herd actually in about, well, it's actually longer than that because that's the 2024 number. So I should have put the 2025 number up there. And then I think it would say 1952 or three. So it's about 7 decades, the smallest beef herd. And you can see the beef numbers just really trending down there since about the mid 1970s. And there's some cycling going on with the dairy cow numbers, but the vertical axis is so big you can't really see it there. But you can see the cycles more clearly with the beef cow numbers, and you can see that we're in a low part of the cycle there, which is related to a whole bunch of different factors. Um, long-term effects of the droughts that we've had, especially in the Southwest part of the United States in the last 10 or 15 years. High beef prices, super strong beef demand. Was just looking at a report the other day from Kansas State University. Glenn Tonsor is a colleague of mine who I've known well for a long time. He runs the meat demand monitor at K-State University, which you might want to look at if you're particularly interested in beef and pork demand. And there we're estimating that beef demand was up 87% in the last couple of years. So, beef prices are high at the store anyway. That's a whole nother discussion about who's making the money out of that and whether it's at the farm level or whether it's at the processor level. But beef prices are high, but consumption stays high. And the only way that that happens is if you have strong demand. And that matters if you're a beef farmer, obviously, but it also increasingly matters for a lot of dairy farms. And then this just shows for the last 25, 26 years what's been going on with the beef cows now are in the blue. I think they were, sorry, Excel swapped it on me. So beef's in the blue, and it's on the left-hand side vertical axis. So you can see it starts off about 33.5 million cows, and now we're down below 28 million beef cows. Right, this is the breeding herd. And then the orange line here is the milk cows. And there's been some ups and downs, but the milk cow herd has been growing pretty consistently. I mean, the big exception being that 2008, 2009 recession, right? Remember the financial crisis that we call the Great Recession that happened, which was triggered by the interest-only mortgages and the ratings on that. That was a pretty big decline right there. Of what, 300,000 cows all at once. But otherwise, the milking cow herd in the United States has been growing since 2005. And that's kind of not an accident. 2005 is when the US really got consistently into international export markets. Okay. And we're at the point today where we're exporting 18% or so on milk equivalents, but it's mostly skim solids, even though we did export more butterfat last year, and we are exporting more cheese over time, but it's mostly been the non-fat dry milk, skim milk powder, dry whey, and lactose. And those products in particular, the US prices are highly correlated with the world prices because we're exporting so much of it. In fact, I'll think I've got a slide later that shows that we're the biggest exporter in the world of non-fat dry milk, skim milk powder. Anyway, that growth in the milk cow herd is entirely correlated with us getting more integrated into the world markets. And what's happened broadly is that we've been consuming the butterfat that we produce at home and exporting very little of the butterfat. So not just in terms of butter, but in terms of creams and high-fat cheeses and whole milk and other things like that. We've been consuming the butterfat at home and exporting the skim milk solids that are competitive on world markets. Now, heifer numbers are at a low in terms of not in absolute numbers. If we go back before 2000, you would see that there was periods when we had less heifers. But in the last 10 years, it's pretty much been a decline in the ratio of heifers to cows, replacement heifers to cows. So we now have 0.42 heifers per cow, and 10 years ago we were at 0.47 or 0.48. So, and that's showing up, right? If you're buying or selling replacement heifers, they're a lot more expensive than they used to be. And I hear all kinds of numbers. but it's not unusual to hear $3,000 or $4,000 for a replacement heifer. And part of the story that really explains kind of these dynamics of what's going on with the milking herd and with the replacement heifers and with the beef on dairy this is semen sales from the National Association of Animal Breeders. And they weren't, before 2020, they weren't breaking out gender sorted or what's sometimes called sex semen, right? I'm going to use it interchangeably. If you're an animal breeder, then you might cringe. Maybe I shouldn't be using interchangeably, but I'm going to do it anyway. So conventional dairy semen in the last 5 years, and we don't have the 2025 numbers yet. It's probably going to continue this trend. Conventional dairy semen goes from about 11.5 million units sold in 2020 down to about 6 million units sold in 2024. So that's just your conventional not sorted. Meanwhile, the gender sorted dairy, which is going to be almost exclusively for the production of replacement heifers, right? So it's going to be female, sorted for female, rises from 7 to about 10. And beef on dairy rises from about 4 million units to about 8 million units. And if you put those all together, the decline in the conventional dairy semen sales is essentially exactly offset by the increase in the gender sorted, which would be for replacement heifers and for the beef on dairy numbers. And so we've got a lot of the kind of backfill for having less beef steers out of there from our beef herd has been filled by beef on dairy, which has been a good thing for people that have taken advantage of it because it certainly has added to liquidity. The prices have been good. And this just shows, that just summarizes the slide that I just had. So conventional dairy semen down 46.5%, gender sorted up 43.5%, beef on dairy up 58%. Because we've been doing more beef on dairy and less, and the heifer ratios come down, we've seen these heifer prices come up. And this is the US average. So again, it's going to be correlated, but it's not going to be anybody's particular price. Dairy slaughter, right? So one of the ways that we've dealt with having 15% less replacement heifers than we had 8 or 10 years ago is that we've kept cows longer. And that's also been encouraged by the fact that if you have a cow that's pregnant, even if she's maybe not super productive at this point, you're going to dry her off maybe and keep her. You're much more likely to dry her off and keep her than you are to send her to kill, because that calf that's in there means that you've got the potential to have a valuable calf now. And it wasn't that long ago when we, in particular, the bull calves that were dairy bull calves weren't worth much. And so what we've really seen is a decline in slaughter, especially from 2022 to 2024. And then it's kind of been levelish, but it's still trending down. And this just shows you that it was about 12% less dairy cows slaughtered in 2024 versus 2023, and about 4% less in 2025 compared to 2024. So we've sent a lot less of them to slaughter. So we probably have an older dairy cow herd than we had before. This would indicate that people are keeping them longer. But it's become much more valuable to keep the cows around than it was just a few years ago, particularly in part because of the value of replacement heifers and beef on dairy bull calves. Cow prices, the latest number, the USDA reports is for January, $162 a hundredweight. And you can see kind of some seasonality there in the prices, but trending upward at the beginning of this. And 5 years ago, we were at $60 a hundredweight or $65 a hundredweight. Now we're at 162. So cow prices have been good. Replacement heifers have been high. Beef on dairy calves have been worth a lot. And this is from the Dairy Farm Business Summary again. And this just shows you the operating receipts, so where the revenues were coming from for these farms. And again, the 2025 number is preliminary. That will not be the number that is in there when we get all of the farms in there. It'll probably move a little bit. Usually preliminaries at this point with this many farms in is not too far off. But what I wanted to highlight was, in particular, the calf sales, okay? So the calf sales, which we go back to 2018, 2019 was, and this is in per hundredweight of milk sold, right? So, and there's this herds are averaging 27 something, 27.3, 27.4. So if you want to do it per cow, you would multiply this by 274 would get you the per cow number but these are in dollars per hundredweight, which is how I like to think about it. But anyway, you've got the calves going from 8 or 9 cents a hundredweight. And in particular, and in very correlated with that graph that I showed you for the beef on dairy, $2.13 a hundredweight in 2025, which by the way are not near some of the numbers I've been seeing, which is people predicting $5 or $6 a hundredweight. It's hard for me to get $5 or $6 a hundredweight out of this. But cull cows, right? Cull cows, you can see back in 2015 was $1.88 a hundredweight, and now it's $2.62, which is higher. But actually, if we adjusted that for inflation, it'd be a lot closer. So clearly, the calves in particular have become a more important source of revenue here. Cull cows, maybe more consistent. And then if you look at, some of the other sources of revenue here, obviously the milk is the one that matters by far the most. The crops one goes up and down. You can tell whether there was a year when people had more to sell and crop prices were higher. Last year, it appeared from these farms that they didn't have as much to sell. There was some drought in some places, but also the crop prices were not great, right? It was not, for a lot of the major crops, it was not a great year to be selling them. All right, so let's talk globally. The latest number that's available for all the countries, this is major dairy exporters. The United States is the dark blue, and the European Union is the red, and New Zealand is gray. And those would be the three biggest ones by far. And this is the change year over year. So one thing to notice is that all of 2025, it was up over 2024 as far as the global kind of milk supply. Now that was from some down numbers, particularly in the first part of 2024. So you have to keep in mind if we're doing year over year, it was up over a down number. But the one that really jumps out here, I think, is the European Union, which had been struggling with blue no, was it blue tongue? That was they had a disease, and now I'm sorry, it's escaping me. Just like we were struggling, not in this part of the country, thankfully, but particularly in California with high-path avian influenza, and that's why some of the numbers changed there from a down year to an up year in the United States. Is it blue tongue? I want to say blue tongue, but I could be wrong about that. I apologize if I am. But they'd been struggling with disease issues in the European Union, and they also had been struggling with some changes that they made on the environmental policy side, which resulted in some farms getting rid of cows, which resulted in milk production being down, and they kind of backed off on some of those rules in a couple countries, in particular in the European Union. And we really saw the milk production take off at the end of 2025, and that's partly why we saw this growth in the second half of 2025 of the major dairy exporters, is partly why we saw those milk prices come down in the second half of 2025. So we're in a situation that's been kind of bearish there, at least for a few months. And we always get these numbers with a lag. But this just shows you the European Union. January 2026 was up 5% over January 2025. And you can see that 2024, which is the green line, was not up really much over 2023, which is the black line. Then we really had the second half of 2025 milk production takes off, and it's still high in January of this year. This is from the European Dairy Monitor. This is their estimates of farm milk prices. So we've got the United States is in red, New Zealand is in green, and the European Union is in blue. I guess I cut off the legend on that. Didn't mean to do that. So right now we've got U.S. milk prices at the end of 2025 being significantly lower than prices in New Zealand or the European Union. And they're not going to, what we see a lot of volatility here in these prices, but they do kind of tend to come back together over time because they kind of have to because of arbitrage opportunities in exports and things like that. So the European prices are higher than ours by, in this case, about 30%, and the New Zealand prices are higher than ours, and that probably means A, that our exports are competitive, although we don't necessarily want to just be competitive because we have the lowest prices, but in this case we are. And that means that there's, and this is lagged a couple months. And if you have been watching the prices the last couple months, we have seen US prices come up some. We've seen the European prices come down a little bit and US prices come up. This is cheese prices, different source. But just so you can see over time, the European Union in red, US in blue, New Zealand in gray. And you can see how much lower our cheese prices have been since the start of, well, the end of 2024, really. In 2025, we've been significantly lower for cheese prices. And that is, I'm going to show you in a minute that we've really seen cheese exports take off, and that's because we've been trading at a discount. So in fact, here's the cheese export numbers on the bottom part of this graph from the U.S. Dairy Export Council, and it really takes off, not coincidentally, in 2024. And we're still not selling a ton of cheese, no pun intended, compared to the amount we're producing. By far, the domestic market is still the most important. And if you're talking about exports, by far the most important market that we're exporting to continues to be Mexico, for U.S. dairy in general, but in particular for cheese. If you look at the top part of this graph, you can see that non-fat dry milk, skim milk powder exports were down quite a bit in 25 over 24. They're up a little bit, but they're not to the 2024 levels. And part of the story there is we haven't been producing as much non-fat dry milk as we had before. We've been sending more milk into other uses like cheese and having whey, but not really dry whey. The new cheese factories that are going in, right, they're not producing dry whey. They're producing whey protein concentrates, whey protein isolates, and other products like that, which are higher value products. And because we've seen more milk go into cheese with the specialty whey products, we've had less dry whey and we've had just less non-fat dry milk, which is a joint product with butter. And so that is part of the story for why we've been kind of exporting less there. It's also part of the story why those products prices have been up this year and they've been strong. This is global cheese trade. So this is in millions of metric tons. So, and the yellow line or orange line, whatever color that is, the top line is the European Union. And they are the biggest cheese exporter by a lot. And in fact, we are an important destination for European cheese exports because we import a decent amount of specialty cheeses, right, from Europe. You go to the store, you can find, I don't know, Jarlsberg and Gruyere and Parmesan and whatever. And by the way, we also produce a lot more of those specialty cheeses in this country than we did 20, 25 years ago. A lot more. And we do a really good job of it. Our specialty cheeses are excellent now. So, but still, worldwide, and this is also why the European Union worries about things like their geographic indicators, and they want to claim the name, like that nobody else can use the name Parmesan and nobody else can use the name mozzarella and stuff like that. They're trying to put that into their trade agreements and stuff because they don't want to compete with U.S. cheeses. So the European Union is the top line. The second line, once we get out to the last 3 or 4 years, is the United States. The United States is that dark blue line. So we are now the second biggest exporter of cheese and have been for the last 2 or 3 years. And the red line there that's New Zealand. New Zealand's third. So it's the European Union, it's the United States, it's New Zealand. And our cheese exports have gone up. And we're going to, by the way, probably need to continue to increase cheese exports because we're adding a lot of cheese capacity in this country, in New York State, for example. So this is butterfat and non-fat dry milk, skim milk powder, which are the joint products to butter exports. And really butter exports kind of take off in 25, and that's because US butter was cheaper. All right, so we were much cheaper than the Europeans, and we were cheaper than the New Zealanders a lot of the time, so we ended up exporting more. The non-fat dry milk, skim milk powder exports go down because we've just been producing less of it, and we still have a lot of domestic uses for those products, so those prices have been up. So this is non-fat dry milk, skim milk powder. Again, the joint products to butter, and the US is the line that's on top there from 2021 to 2025, and now below it, below the European Union. So we kind of went back and forth with who exported the most for a long time, us or the Europeans. New Zealand is the third in red there. And we are now, or this last year, we've exported less, but that's because we just produced less of it and we had less available for export markets. And then this is global whey. And again, it's the United States and it's the European Union. This is the joint product, obviously, when you make cheese. And one thing that is interesting to me is the Europeans is a much steadier set of exports than ours. And our whey exports have kind of cycled a little bit more. And that's kind of directly relatable to the amount of whey that we were sending to China. The years when it went up was the years that China stepped into the market big and particularly bought our whey. And the years when it kind of went down is when there was less going to China. And the Europeans have, well, frankly, they have more stable trade relationships, particularly into the Middle East, North Africa, some other places like that where they've been sending them. By the way, this conflict in Iran, the Middle East and North Africa is really an important destination for dairy exports. Not necessarily the US, although we send a decent amount to the Middle East. It's more important for the Europeans, but to the effect that this conflict disrupts the flow of exports into the Middle East, and those will be exports that will be looking for a home. And if they're looking for a home, it's more likely that they're going to come to places where they're competing directly with the United States exports. So it does have an implication there, particularly if it drags on, and hopefully we get this thing done and we don't have to talk about it anymore. U.S. butter stocks.
We had a question in the
Sorry.
chat.
Yes.
You want to tackle it while we're talking about exports? Does the U.S. use NFDM exports to balance our milk or to balance our market, selling it at a loss?
Not necessarily selling it at a loss, although it's possible sometimes that could be happening. We definitely we're gonna export maybe about half of our non-fat dry milk, 50 to 55%. The last time I looked, and I didn't look for where it was for 2025, but for 2024 it was like 54% of the non-fat dry milk, skim milk powder ended up exported. And you know what? My sense of it is that we're not subsidizing those exports like we used to. They're now competing on the world markets, and so that's the best price that they're coming up with, and hopefully they're not losing money. But it's possible in some periods that could be kind of a loss leader, if you will. I'm not going to say that couldn't happen, but in those cases, it's going to be a minimizing loss as opposed to maximizing profit. But our prices are, we're kind of the world leader in that product as far as the amount. Well, it kind of depends, right? It depends on, we were the world leader for 2 or 3 years, but we're still right there with the Europeans. Right, so if we think about like Canada, for example, so Canada has that production quota, right? And they set their production quota, milk production amount based on their butterfat needs. And of course, when you produce fat, you also get the skim solids, right? And when we consume those in different products. And the kind of the base of the conflict that we've had with Canada in the last few years is because Canada sets their milk production based on butterfat needs, they have the exact same consumption patterns we do. They have ended up with more skim solids than they needed. And you can feed those to livestock, but that's not the highest valued use. The highest valued use is usually in some food product, right? As protein additive into, I don't know, making hot cocoa or whatever. But they haven't been able to sell their excess skim solids into the world market because their farm price is twice the world price, twice ours. So they were dumping their skim solids on the world market, and that's kind of when we got sideways with them, when they were selling their skim milk powder into Mexico at 5 cents a pound less than we were selling our milk powder into Mexico. And we were, our farm price was half of theirs. So clearly it was dumping. So we don't have a production quota like Canada, and there's pluses and minuses to having that production quota. If you own production quota, it's a great thing. If you got to buy it, it's not such a great thing. But the consequence of us kind of being more in the free market is we've been at world prices and we've been able to export this. And it's a good question. I think we probably are at least marginally profitable most of the time in exporting this and then thinking about the products together. It's a good question though. Butter stocks, right? So we've been producing more butter fat. Components have been up, as I said. We've been doing a better job genetically selecting. We can now feed for butter fat, like everybody's growing brown midrib corn for their corn silage, right? And all that kind of stuff, which helps with the fat production. But still, we haven't built butter stocks. And I think that's a really good sign. That's a bullish sign for where we're at. We haven't been building butter stocks. Because we've been exporting them and we've been consuming them because whole fat dairy continues to be, kind of a growth area. And butter prices, though, haven't been super strong. And so we were at 276 2 years ago, 240 this year to $1.72. But that's also how we've been exporting. We've been exporting because have lower butter prices. And that butter price is down 43% over a year ago. I don't know why I had that up in the corner. Should put it down below. Again, we've really had the component test take off in this country in the last, particularly since 2010. But we've been consuming it or exporting it. The non-fat dry milk, our stocks are lowish, lower than last year, not as low as 2 years ago. But that's really shown up in the non-fat dry milk prices, which I'll show you here. So non-fat dry milk prices, which had been $1.20 to $1.30 for a long time, are now at $1.60. And so the non-fat, which is also why, partly what that question was getting at, we've been exporting less because there's been strong demand domestically, and we've been producing less. So we've just been keeping more of it home. And so if you look at what's happening with class 4 prices, and I'll show you that graph here in a little bit, class 4 prices, which is milk for butter and non-fat dry milk, those prices have been strong, and those prices have been strong almost completely because of the non-fat dry milk, not because of the butter price. Cheese stocks, we're at 1.38 billion pounds of total natural cheese in warehouses. By the way, not government cheese. These are privately held warehouses. We don't have the government cheese stocks like we used to. That's down 1.4%. So that's another good thing. We've been ramping up production of cheese, but we haven't been building stocks. So again, it's been competitive, and we've been consuming it or exporting it. The cheese spot price is down from $1.88, which was pretty high in February of 2025, to $1.47. That's 22% decline, and that's part of how we've been. Demand curve sloped down, prices are lower, people are going to eat more, and we're going to be able to export more. And then dry whey, right? So I said we've been producing more cheese, but the joint product on these big new factories, these big new processing facilities, is whey protein concentrates, whey protein isolates, not dry whey. So dry whey stocks are down, but that's kind of been a long-term trend. We've just been, you're much better off making WPC 80 or whey protein isolates than you are making dry whey. And it tends to be some of the older factories maybe, or smaller ones that are doing dry whey. And that's probably, unfortunately for them, a place where they're missing out on some potential value added and profits in those way. Now, I wasn't gonna. Let me just mention this briefly. Part of the story with the demand, and it's part of the story on when we were talking about the demand for beef and how strong it's been, and the demand for chicken and demand for pork has been strong. The dairy demand, dry whey is a good source of protein, right? Whey proteins. So dairy has casein proteins, which end up in the cheese, and the whey proteins, which get left off in the whey if this is what you're making. And in particular, the younger generation, the 20 somethings today, cannot consume enough protein, at least as far as they're concerned. And that's a good thing for people that are selling protein, right? And then these GLP-1s, which, if you believe the statistics, and I guess I don't have any reason to disbelieve the statistics, 15% of the United States adult population is on a GLP-1. And when you go on a GLP-1, all the research seems to suggest that they cut calorie consumption by in the neighborhood of 10%, but they want to eat. But if you're going to do that, you're cutting out the hollow calories, so maybe the junk food, but you want to keep the high quality calories. And the high quality calories in this case are in particular are proteins. And so this part of the strength and the outlook for dairy is going to be determined by whether we keep consuming, have more strong markets for things like the whey, but also for cheese. Cottage cheese consumption is way up in the last 2 years. We had hit a couple of years ago, I think we hit the lowest in, I don't remember how many decades, of cottage cheese production and consumption, because we don't tend to export cottage cheese for the most part. But the last 2 years, that's been a real growth area. And actually cottage cheese production in the northeast part of the United States has been a big deal because we have a whole lot of people. We're well situated for the the population on the eastern seaboard, particularly in the northeast. And so that's been a story. So part of kind of these consumption changes that we've been seeing are really kind of spotty depending on where you happen to be sending your milk and what you're producing. But more cottage cheese consumption, even if your milk isn't going into the cottage cheese consumption, those factories are soaking up relatively more of the milk supply and should be in general bringing up the farm level of milk. And so the demand story, I think, here in the ability for dairy to be part of the protein consumption boom that we're in is I think is a really big deal. So the dry whey spot price here, we've got it at 70 cents a pound, which is, excuse me, 20 cents a pound higher than 2 years ago. That's a pretty good story. And you really can see that on this, the dry whey spot prices really take off in the second half of 2025 and continuing in 2026. Dairy margin coverage program sign up was completed a few weeks ago. Hopefully everybody that wanted to get signed up for it did. The tier 1, which is the kind of the lower premium, relatively premium tier, that would be the part that you wanted to guarantee if you could get signed up, increased from 5 million to 6 million pounds annually. And you could establish a new production history, and as opposed to using that production history, which is 10 years old. And you could lock in, if you locked it in for 6 years, and you could get a 25% premium discount. We saw the dairy margin coverage, which is an income over feed cost margin, right? So this is the all milk price minus an average, a representative average U.S. Ration cost. Was down in the second half of 2025, but here's where we were as of close of the markets yesterday. This is using the dairy margin coverage tool, which is online and anybody can get to it. And again, this is for the whole U.S., so that all milk price forecast is for the United States. The corn price is for the average for the U.S. It's not going to be anybody's particular corn price. But in general, it's correlated, and it's correlated with New York and Northeast farms also. But here's what markets were forecasting yesterday was that we had milk prices, which started off relatively low for all milk price, $17.50. But that was because class floor price was 14 something. But the futures market was forecasting it to kind of recover into that $21 plus range, particularly in the second half of this year. Kind of depends on how we do for the general economy. Corn prices staying low, below $5. That alfalfa hay price is USDA's estimate. I don't think that's supposed to be the premium supreme hay price. I don't know anybody's paying that for good dairy hay, but that's just, it is what it is. That's kind of long run average price at $220 a ton on that one. And soybean meal at $300 to $320 a ton gets you a dairy margin coverage forecast. And remember, you can protect up to $950 on that first tier. So that's the level where you could get a payment. And you've got the first 2 months of the year forecasted to do, well, it'll be $1.69 a hundredweight for that January one, and $1.04 for the February one. And then not forecasting a payment for the rest of the year. Now, one thing about the dairy futures markets in particular, the class 3 and the class 4 futures markets, is that, that's kind of the best guess of everybody coming together to trade those contracts. Historically, it's not particularly good at picking out gigantic, big changes in price, especially big downward changes in price. And that's because those big downward changes in price tend to happen because of a shock we didn't see coming, right? So like a weather shock or a disease shock or a trade war or, something like that. So it's not like at all inconceivable that the second half of this year might end up below where these prices are. It could also end up above it because, currently we're still the low price in these markets that we're exporting into. And so we would expect over time, either Europeans got to come down or we're going to come up, or some of each. This is where the futures prices closed the other day. We've got the class 4 prices, which start off below 14, really bouncing up here to where we're at, above 20 now. That's, again, class 4 is butter and the non-fat dry milk. And mostly that's not a butter thing, that's a non-fat dry milk thing. Class 3, which is cheese and dry whey, is also forecasting kind of back into maybe an average price, not a great price, but an average price. And if you're thinking about risk management, traditionally the peak farm milk price of the year is in October, and the lowest price of the year is in April or May. So we should be in the kind of the lower prices here if it was a typical pattern, and we should have higher prices in October. And if you're thinking about something like dairy revenue protection or something like that, you'd be looking out there to see whether you had a pretty good handle on your feed costs and whether those prices could be something that look like they might be profitable. A lot of the story with the Iran conflict has been that fertilizer price. Sorry, did I miss something, Meg?
Sorry, we had another question in the chat going back to the protein demand and your GLP-1 point. If and when the GLP-1 trend fades, is there still strong demand for protein, signaling a real change in the U.S. diet?
Good question. And I think I would say two things. One is, from what I've been reading, at least one of those GLP-1s is coming down in cost, even if you don't get it paid for by insurance. And so if those come down in price to half of what they are now, which is what the forecast I saw said was going to happen in the next couple of years, it may be that we see more people going on the GLP-1s, because apparently it's becoming increasingly common. I don't know. I mean, I do have questions about kind of long-term consequences of being on that and stuff, but I'm just an economist, so I should stay in my lane. But secondly, I think we've seen a real shift in protein demand. I think we had a period there. We had 10 years where fat was kind of the star. And by the way, I don't think the demand for fat, that means it's going to go away. I think a lot of people have figured out that high quality fats are an important part of the diet, that they have many benefits, not the least of which is they make you feel full, right? And so I think that, see, I grew up in the 70s and 80s, and I remember that the news was all about, don't eat eggs, don't eat beef. I mean, for a while there, pork's generic advertising program was pork the other white meat because they didn't want to be associated as a red meat. They were trying to, and so I think, but that we're now past that. People, I think, recognize that it's the quality of the diet that matters, and everybody under the age, in particular, under the age of 25, between like 15 and 25, is massively into protein consumption. I think we're going to see long-term consequences of that, and I think even that's even trickling through to everybody. People are concerned that they consume 1 gram of protein per pound of body weight a day. I see that, it's possible that I'm just seeing biased stuff in what I'm reading, but I don't think so. I get the sense that this is kind of a here for the long term kind of pattern. In the story is higher quality diets, not more, but higher quality, and so I think that's a good thing. I mean, I look, and in the protein prices right now, could it be a little bit of faddish? Yeah, maybe, but I think the biggest danger in the short term to demand is a recession. Because if people stop going out, that's going to change what they're going to buy and how they're going to buy it. But yeah, I don't know. Good. It's a really good question. I think there's going to be boatloads of research done on that in the future. Maybe I'll start doing it. That wasn't what I was working on recently for demand, but maybe I should be looking at it. It's a really good question. So fertilizer prices way up, right? So the question here is, how much of this fertilizer prices got locked in at the end of last year? Right? Normally, because of income tax management, we, a lot of the feed, seed, and fertilizer, a significant portion of it gets prepaid at the end of the previous calendar year. Now, the corn and soybean guys in the upper Midwest, and in the Corn Belt in particular, didn't have a good year last year. So maybe they locked in less than they normally did of fertilizer prices. And that this would turned out to have been a bad year to have not locked that in. Unfortunately, right? You don't know this is coming. So if you didn't lock it in, then you're probably not so happy about it. I think a lot of people are going to look harder at their fertilizer decisions this year. I know from a project that we did a few years back that there were farms that, when they really kind of got down and pushed the pencil, realized that they could spread a lot less phosphorus on some fields where they'd been spreading manure, that they didn't need to buy as much phosphorus as maybe they normally would. I think so. Maybe we'll look harder at that. And the one that you can't get away from as much is the nitrogen on the corn, right? You kind of need some nitrogen. So it's going to be interesting to see how that trickles through to the corn production, which will also impact the soybean production, because generally in the Corn Belt, the acres are going one way or the other. Last year we had 98.8 million acres of corn and 81 million acres of soybeans. And the USDA is currently projecting 3.5 million acres to come out of corn. So it puts us at 95-ish million acres of corn and like 4 million acres to go into soybeans, which puts us at 85 million acres of soybeans. It's going to be interesting to see if these fertilizer costs affect that, which will affect your purchase feed costs, right? To the extent that you're buying your grains. And historically, right, it's not a bad thing to be buying corn, because a lot of times you can buy it for less than what you can grow it for. But you definitely want to grow your own forages. So it's going to be interesting to see how that trickles out. The other thing on the supply side, particularly for feed, and this will also impact, by the way, beef markets, because if we right now, well, hold on, I'm getting ahead of myself. Let me just skip down here. Here's the drought monitor. The latest one, the new one will be out in 2 days. They do it once a week. We have had, the royal we, the lower 48 of the United States has had it was the hottest March, and I think the hottest April in the Pacific West and in the Southwest part of the United States ever. And this is a drought monitor as of last week. And, so the darker colors is more drought. And I don't know about where you guys are at right now, but we certainly don't have any drought in Ithaca. In fact, we could use a lot less rain right now, but I'm not going to get that wish for a while. But Texas, dry, not necessarily where the dairy guys are. Well, a little bit dry up in the Panhandle where the dairy guys are. Southwest Kansas, where that new plant is in, that's dry. Colorado's dry, but not so much where the dairies are. But if this continues, this heat, and we get dry there, that's going to also impact a lot of what part of the story with the beef herd, right, is that there was a lot of culling going on because it was just too darn expensive to feed them all winter long when the drought with the hay prices were, particularly in the Southwest. Right now, we have so a lot of the weather, right, is the current in the Pacific, whether it's going north or whether it's going south, of what kind of the average. And right now we're neutral. But we're neutral, and we had been for the previous 2 years in La Nina. And the opposite is El Nino. And right now the forecast is we're neutral because we're going from La Nina to El Nino. Okay, and El Nino is likely to develop as what the forecast that was. This is as last week. Also, this is the forecast from NOAA. El Nino is likely to develop 62% chance of emergence between June and August. Typically, that means warmer, drier conditions in the Corn Belt. And by the way, it's amazing to me how kind of resilient the corn and soybean varieties we have now are to some of this weather, but still that will impact it. And it typically also means drought in the Amazon, which, Brazil and Argentina are by far the most important players to watch besides the United States in the world corn and soybean markets. So if that happens, what does that mean? Right now, we've got a lot of corn stocks. We've got a fairly big stock of soybeans too, but we could use that up. All right. And if it develops, it's supposed to persist at least through 2026, and kind of they don't forecast it longer than that. So that's one thing to watch. It's going to affect the corn prices. Probably it's going to affect the soybean prices, not just here, but everywhere and globally. And it's when it gets really dry out west, the hay starts moving from the upper Midwest and the Northeast West, and affects local hay markets and all that kind of stuff. So something to watch. Forecast prices. March is the last WASDE. WASDE's USD is World Agricultural Supply and Demand Estimates that they put out once a month. And then April 7th futures. So this is just to give you reference. So for the corn, soybean meal, it's the production year, which always starts at the end of the previous harvest and then finishes at the next harvest. So 2023, 24 is after the 23 harvest through the 24 harvest, and so on and so forth. Okay. So we are now in the 25, 26 year. And the forecast for USDA is $4 corn, $10.50 beans, $300 a ton soybean meal, which is about where futures markets are. That's a little bit lower than where the futures markets are now. The all milk class 3 and class 4 prices on here are calendar year, because we don't need to worry about harvest. We're always harvesting. Okay, so USDA and the new WASDE, by the way, will be out in 2 days. It'll be out on, today's Tuesday, right? It'll be on Thursday, the 9th. So USDA's got all milk at 1970, class 3 milk at 1665, class 4 milk at 1715. I was looking back at the last time I had looked at this was end of January, beginning of February, and that class 4 milk price is $2.50 higher than they were. And that's almost all due to the non-fed dry milk increase. So, and then the futures prices you can see is the last column. So that's as of close there. All milk at 2020, and there's no futures for all milk. I'm inferring that using long run basis from class 3 and class 4 prices. So futures prices are higher than where USDA is. By the way, that usually happens. If you work for USDA and you're forecasting farm prices, you take a lot less grief if you forecast them too low than if you forecast them too high. So I'm not picking on those guys, but they always forecast low. Futures prices, I think, is better, closer to where we're at. And, which futures price says it's an okay year, not a great year, but there's still time for it to go either direction. So how's that for waffling on what's going to happen. Probably an okay year. And my personal opinion from looking at the data and stuff is if you're looking to do risk management, you want to be 6 to 9 months out. So I don't know how much I'd be locking in if I was doing it, and then especially on the milk side in the next 6 months. But you could be if there was a really prime opportunity. The statistics would also say that about 1/3 of the milk production in the last couple of years has been protected using the Dairy Revenue Protection Program, which tends to be used more by the big guys, but anybody can use it. And so a lot of people are, even if they're not using the futures markets directly, they're using it indirectly by using the Dairy Revenue Protection Program. Okay, well, I'm a little bit over. Sorry about that.
That's okay. It's okay. Do we have more questions from the audience? You're welcome to unmute and ask, or raise your hand, or type it in. Well, if you're working on doing that, I have one, and maybe you don't want to even tackle this, but do you have your crystal ball in front of you to talk about fuel prices and trends there, or don't you want to touch it?
Fuel prices.
Sorry.
That's really that's a really good question. And so this Iran conflict has kind of shown how much these fuel prices are global, right? So we don't import anything to speak of from Iran, and we haven't for a long time. So, and we are in fact a net exporter of oil and natural gas. But when the prices go up for other countries, because it's a global market, that product from here gets bid away if it's a higher price, and our prices come up. So when you take the Strait of Hormuz, which estimates say about 20% of the oil in the world moves through, and you close it, which is essentially shifting that global supply curve back by a significant amount, then we all see prices go up. And those tankers that leave that strait take several weeks to get to their destinations. And one of the big destinations for Iranian oil is apparently China. So we are now at the point, what are we, 5 weeks into this thing? We're now at the point where some of the tankers that would have been leaving but around the time the conflict started are not arriving where they were supposed to be going. So I think the big question is, can we get that back open and get that oil flowing? And how much of, if any, of the infrastructure in Iran and the other countries around the Gulf were damaged? And if the answer is that it gets flowing pretty quick, and we don't have a lot of long-term damage to the refining capacity and the loading capacity and all that kind of stuff, then I think that we could see those prices come down. And the thing about fuel prices and the reason they're kind of so important, not just economically but politically, is there's no avoiding them. Like I don't care if you built your house and you have solar panels and a windmill and you don't buy any electricity, you still can't get away from the fuel prices because all of your food and everything else has to get hauled at some point using fuel. So there's just no getting away from it. And so I think, which is why it's just so deadly politically, and why everybody talks about the price of gas. So the price of gas in the United States has gone from $2.98 to $4.12 yesterday, according to the AAA. That's a lot of money. That's a lot of money because it's your food price, it's your transportation price, it's your it's your heating your house price and cooling your house, all that stuff. Yeah, I don't know. That's a really good question. I think the longer this goes on, obviously, then the first thing that starts to happen is people aren't going to go out to eat as much, which is going to change what they eat. They're maybe going to be less likely to go on vacation. So if you're in an area that depends on tourism, And tourism has already been hurt because we have less people coming from other countries. I don't know. It's again, I continue to be impressed with how resilient the general U.S. economy is. And I think part of it was I was underestimating how much stimulus was put into the economy with the tax breaks that were given last year. And kind of showing up this time of year when you're either maybe getting a refund that you maybe wouldn't have gotten before, or maybe you're paying less in taxes that you owe. But at some point, the amount of challenges that we have to the economy are really going to catch up. How's that for walking all around it?
Oh, that's good. Thank you for shedding some light on the situation.
I see John's question there. Was that do Americans
John
make choices? Yeah, that's a good question. So the food pyramid, which is a every 5 year thing, which is the dietary guidelines, and then they make the kind of recommendation. And the new one kind of flips the pyramid, right? And recommends more of the meats and things like that, less of the cereals. The answer, I think, is it does have an impact in the market. It has a direct impact in anything that the government programs purchase has to follow the guidelines. So that means school lunch, it means prisons, it means the military. And those are three pretty big uses of food. I was talking to somebody a couple weeks ago who worked for a firm that supplied meals to prisons. And this person was very worried because they had already bid for the next 2 or 3 years what they were going to supply the prison food for. And they said that bid, which they put in before the food pyramid came out, did not reflect the higher protein requirements. And they were very worried that if they couldn't redo that bid, they were in trouble because they weren't going to be able to supply the required protein. So it does impact that and school lunches and things like that, which is a good thing. And I do think in general, people, you kind of inadvertently, it has salience in your life because you see it so much. So I think it has a few indirect effects and it has a few direct effects. And I mean, I don't know how much I worry about that. But anyway, but it's a good question. I see Tom has the hand.
Tom has his hand up. Tom, do you want to unmute and ask your question?
Sure. Can you hear me?
Yes, sir.
Yep.
Okay. Back to exports. Shipping dairy to the Middle East, they're becoming a bigger customer.
Yep.
And more important for national or for global exports. As the Iran conflict continues, I've read that it used to take between 30 and 40 days to get a container to the Middle East. And now they're figuring it's going to take between 60 and 75. How much of an impact do you think that's going to have on exports going forward? And at what point does it become a crisis?
That's a good question. I think one of the things I think it's a good point. Middle East has been a growing outlet for U.S. dairy exports in recent years. Still a bigger deal for the Europeans, probably at least in part because of the proximity and history that they have. The cultures in the Middle East, dairy's a big part of the culture there, and they have, and it's a big part of the diet kind of naturally as opposed to like in Southeast Asia where it's less big part of the diet historically. So the Middle Easterners, more yogurt, more cheese, more things like that. So it's been an important outlet for the U.S. I mean, I don't think we were sending anything to Iran before, so we were only kind of getting it kind of indirectly. So, but I do think it's going to affect us because the Europeans are going to send less there. The other thing that I think you bring up that's a really good point is I think we all ended up learning more about logistics during COVID than we had known before, right? So probably didn't spend a whole lot of time thinking about how long does it take to load or unload a container ship, or what does it mean if we can't get a backhaul from China on those containers, and how much does that mean for what it costs us to send a container to China? And so that's partly what's also going on here, and we are going to probably see a trickle down effect by the fact that how much it costs and how long it takes to get ships there. And right now, right, if you're a U.S. or other flagged ship, you're not going through that strait because you're not going to take a chance because the insurance companies won't insure any ships going through there right now, or they will, but it's too expensive. When I say they won't, I just mean it's prohibitively expensive. Um, I think that's a really good question. I think it's going to show up probably in our export demand. Maybe what happens is that our prices don't go up, but the European prices come down to ours, at least in the shorter term. But it's definitely something to watch. And I mean, we'd all be better off if they would wrap this thing up sooner rather than later.
This is Barb. I just wanted to talk about that a little is because that part of the world is not a huge, um, it isn't like that our exports that there's a huge amount of our exports going to that part of the world, but it is a growing market and it's been significant that way as far as trying to build those markets in those places, just like Asia. And so these disruptions that happen are, all of the things that you have spoke about, Chris, but some of it too is it causes a disruption in the growth of these markets and the ability for the peoples there who have these tastes for American dairy to have access to it. And so then when it changes so that there is easier access to our dairy again, it's like rebuilding again. And so that is, I know for me, that's a concern, a bigger concern for me, because it's like the way you talked about fuel, that if they can't get fuel one place, they access it another, but it affects all of us because it's a global market. Everything's a global market. The other thing I wanted to say was earlier there was a question about, you know, us exporting at a loss or, SDEC, you know, the thing is I, on a personal basis, I feel it's better to move versus stock inventory. I think if we look historically that stocking our product has not necessarily helped us for the long run. But the other part of it too is that like 20 years ago, we talked about how we didn't have enough opportunity in the world market for cheese. But it's because in our country, we had not built um, product being produced for the world market. We made a cheese that got it off, got it processed, got it stored, and then when we had too much, we kind of were looked at as that used the world as, our let go, and we were not considered to be, have great cheeses. We just looked at like that when we needed the world to get rid of our product, we used them as a dumping ground. So then we started building our portfolios that like more fed the world tastes that are different perhaps or quite significantly in some places than Americans, but also the sizes and shapes and container sizes, and that was all something that our industry worked hard at so that we could be um, a player in the export market. And I think we've done a really good job of that, even though the EU says we haven't. I don't think they would say that we're no big deal unless they were afraid of us. But that's another conversation. But the other side of it is now we've become really good at producing butterfat. We've changed with the way we, our breeding, our, how we feed our herds, but we as a industry do not have great export markets for butterfat. we are going to have to work on changing within our industry so that we make products that are good for the world market. Our percentage fat in our butters are different than what most of the world market is. We are a salted market. They're not. Even the shape of our butter is different than what is, more a global market. So those are some of the things that I know, like for me, that's been a learning experience for me as far as milk producer to understand better because, I tend to think that what we consume here is what everyone consumes. And yet, it only makes sense that you go to another part of the world that's a lot different.
Yeah, really good points. I think that one of the things that you're getting at that's really happened in the last, well, we've seen the effects of it in the last 20 years, but it started before that, was that we've moved from a kind of supply driven, just looking for kind of to get something out and put away, which worked when we had a price support program, for example, to more of a demand driven, right? So now it's about meeting the demands. The Europeans built these relationships much earlier than we did for their export markets, and we've been playing catch up. But also one thing that you point out that I think is really important is it can't just be we'll call you when we've got something we want to get rid of. If you've got to be a reliable trading partner there, or else they're going to find somebody else so that they don't have to be looking for a new supply all the time. And so part of it also, this conflict in the Middle East is unfortunately going to turn some countries off as far as who they see as who they think is a reliable partner, and we'll have some impacts there. So it's all really good points. And then Maggie said what we had a question about the large dairy expansions. Yeah, that's when I go other places in the country, that is what everybody wants to talk about. What's going on with New York with all the new investment in dairy processing capacity? And so we've had a lot of, well, we're in the middle of a lot of new investment. Some of it's open already, some of it's still ongoing. Dairy processing capacity. If you look at New York State, 16.1, 16.2, something like billion pounds of milk production. Historically, as in like the last year was, I haven't seen the 25 numbers yet because they're not out. 2024 numbers, 4 billion of that 16 billion pounds in New York left the state. But some of it was going, to Vermont for cheese or for yogurt or whatever, and some of it was going south. So, one of the things that's going to happen, I think, is more of the New York milk is going to stay home, which is, if you were in a neighboring state, maybe means that you've got some opportunity to fill some of that where that New York milk might have been going. But there's a whole lot of questions about how much more milk and cows are we going to have in the state of New York, and I think it's a really interesting question. I don't have a good number for it at this point in time, but I do hope that kind of a rising tide lifts all boats, and that there's some really strong demand that comes out of this at the farm level for the New York farm milk.
Well, I know our having local dairy plants